Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi, and Nigel is back from his holiday. Guys, good morning.
Hi, morning. Good to have Nigel back, fresh from the mountains, and we've got the market primed up for your return.
Well, that's right. I had a great vacation. I was away in the mountains, and the joys, the simple joys of life, right? Fresh air, clean water, sourcing your wood for the evening. I'm feeling refreshed, and I think you guys should try it as well. In rural India, I mean, there's so much to look at. I lived in a small village in Uttarakhand for all of 7 days. Market action was great. I'll tell you what, I had a really, really good time.
All right. Well, it's the mountains always refreshing.
Yeah,
absolutely refreshing. Well, I'll just quickly run you through what you need to know as we begin this new week, because the last week was a fantastic one. The market started on a sort of very, very, very strong note and then kept building on it. And it's unlike what we've seen for many months now. So let me start there with just a quick sampling of what we saw. We basically were up 5 days in a row. Well, you'll say, well, so what? 5 days in a row? Well, it was the first in 7 months that we've had 5 days up. This is, of course, the market topped out in late September. And after that, it's essentially been extremely tough trading days. Last week, we got a bit of a relief. Actually, not a bit of a relief, a fair bit of relief. So gains kept broadening. That's the other point. Small caps and mid caps joined in. It looked like large caps only, but then mid and small caps rallied hard. Just to put the numbers up in terms of what we've done now from the lows of the 3rd of March, they're up on your screen. The Nifty is up about 6%. The Nifty Bank is up about 6%. Mid-cap index is up 10.5%, and the small-cap index is up 13%. So these are massive moves coming through in terms of what we've seen. Now, let's just sort of come back to the local markets with levels, etc. in a bit. But let's recap the global setup as well. So for global markets, while we were having this, rocket of a time, it was quiet. And last week, macro-wise, also not very much. It's not as if the dollar, all the moves in the dollar yields, etc., happened till the end of the week before last. Last week was not very big in terms of moves at all. Nasdaq on Friday specifically, 0.5% higher. Dollar index has been creeping up 3 days in a row now. We are back above the 104 mark. Now, of course, as we look ahead, it's essentially, the countdown to the tariffs day, which is the 2nd of April, reciprocal tariffs day. Remember, 1st of April is when Trump's team is going to present to him the review of America First policy, and the 2nd of April is when the reciprocal tariffs are to be announced. There is enormous amount of uncertainty around what is coming, right? And this is in various ways, whether they're going to go everything on the table, whether they're going to do a phase-in, which is they start small and then maybe the impact is dented, which countries, etc., etc. Recent comments have been suggestive of the fact that the Trump team is saying that tariffs will be more blunt than they will be precise. I mean, Trump has again and again said, I think over the weekend also, he put out a post saying 2nd of April is going to be U.S. Liberation Day. So, he's kind of obviously building it up. But there are also headlines over the weekend. And this is with regards to, I think Bloomberg carried a story, quoting sources, of course, that tariffs may be more targeted than previously expected. Actually, the story goes on to say that there may be some exemptions as well. I think the Wall Street Journal also picked up that story. We just don't know so far till the last Friday, the message being that it's going to be broad-based, going to be big. Now they're saying over the weekend, at least news reports, source-based news reports are saying perhaps maybe more targeted. And there is a huge amount of uncertainty. Remember, the market's done extremely well here, and now you're running into this big event. Will we see some pause? Will we see, the market wait and see, and then let's decide? It's possible. And I think that would be wise as well. The next upside level, in any case, as I've been saying for at least 2 weeks now, the market's headed higher. The next level on the upside is 23,500. 23,600 is a 38% retracement of the entire fall that we've had from the highs to the low. But between where we left off and 23,600, 23,497 is the immediate resistance. The February high then comes up, which is 23,807, which is also going to be an important resistance. So 23,500, 23,600, and then 23,807. Support stands at the 40-hourly exponential moving average, which has also been pulled higher. That number stands at 22,960. And the Nifty Bank is basically back at the February highs. The resistance here is 51,085 and 51,883, which is the 50% and 61.8% retracement of the fall. And support here also is at the 40-hourly exponential, which is 49,555. So, I mean, you know, I would say the way to kind of tackle from here to then, to post 2nd of April, is going to be maybe right before the 2nd of April or maybe even before that. By the way, I think the uptick that we're seeing is also correlated with the S&P, and that is because of the weekend Bloomberg story. The S&P mini futures are up 0.5% after that weekend story hit, that the tariffs may be more targeted. But as I said, we just don't know. And maybe closer to the 2nd of April, you may get a bit of a wobble. People may hold back. Very, very natural for that to happen. And if there are large numbers which are put on the table, the market takes a dip, which then perhaps may be a bit of a buying opportunity. But it's all up in the air. The market's done very well. And I think we'll have to just see what comes our way in terms of tariffs, etc. 100 points higher on the GIFT Nifty. We'll see if those gains hold. Guys.
Absolutely. And the GIFT Nifty this morning is also higher because US futures are substantially higher. There's a 0.5% upwards bid already on all the futures, S&P 500, Dow and the Nasdaq. And some of this has to do with a statement that Mr. Trump made on Friday. Then there was analysis over it over the weekend. He basically said that there can be some flexibility, but basically it's reciprocal. So his usage of the word flexibility got people a little excited in terms of whether there will be back and forth, there will be negotiation, where sort of April 2 is maybe not end of the world kind of a day. They've anyway said they start with one particular tariff number assigned to every country, and maybe then there's some scope for negotiation and quote-unquote flexibility. Anyway, as markets await that, Asia is very flat this morning, absolutely no major directional moves anywhere, whether you're looking at Japanese equities, China, Hong Kong, it's all extremely flat. Let's get some of those markets up on the screen. So not much happening. By the way, Mr. Trump also said that at some point he will be interacting with the Chinese leader this week, Mr. Xi Jinping. We don't have timelines to that, but he said that he will be talking to Xi Jinping this week. So that's also something that the market's going to watch out for. Ahead of that, equities are very, very quiet. The currency market saw more of a move, given the fact that the dollar has managed to inch back to 104. That led to a bit of a downside pressure finally on the euro. Some profit taking given the huge surge. Remember, last week the euro was above 1.09 as well. So from there, it's cooled off a little bit. The yen's also seeing a bit of a recovery move. Brent is the only concern for the Indian market in terms of the global cues, because by the time the US actions shut on Friday, the figure was 72 on the screen once again. It's come off a little bit right now, and that's because there's some chatter about how OPEC Plus will rein in overproduction, and also the fact that these additional sanctions that have come in on Iran that the US has announced, they could take about 1 million barrels off the market. So that's that's the reason behind that upward move on Brent prices. Now let's come to the fund flow picture. Look at the bazooka buying in cash on Friday. Nigel's going to talk about the F&O space in just a bit. That's 7,400 crores of net buying. Remember the days we were being slammed with 8,000 crores of selling? Well, these things turn, and it seems that they have, at least for now, 7,470. Domestic institutions were actually on the sell side, about 3,200 crores. The comeback last week has been fierce, ferocious, and strong, and the bulls will see if they can build above that. Small cap index 8.5%, mid cap index 7.7%. Nifty Bank up over 5%, and the Nifty itself up over 4% last week. So can we get to more? A lot of the average, the daily moving averages, 20 and 50, they were already taken out last week. The 100-day comes into play right now, which is at 23,521. So it's looking very, very good. Let's see if the bulls can build on it. Very quickly, some stocks and news. Motilal Oswal Financial Services, the promoter entities, Mr. Motilal Oswal himself, Mr. Ramdev Agarwal and the foundation, they'll be selling a small quantity in the market, but they've clarified that this is for philanthropic purposes. There's UCO Bank, which has launched a 2,000 crore QIP, And watch out for Apollo Hospitals, that a slightly complex deal that was happening with Kaimed, the promoter entity, where they've merged with 24/7 with Apollo Health Co. Now Apollo Hospitals, the listed entity, is buying 11.2% stake. So let's just go over the details and we'll see. That will definitely keep the stock in focus as well. But Nigel, we got the bulls fighting again, the animal spirits fired up, waiting to welcome you back.
Well, that's right. There are two big cues that I'm going to be tracking from here on. So the first cue is going to be the FI numbers. That's going to be important. In Friday's trading session, as you all said, there was a big bazooka buy number, but that was skewed because of the FTSE rebalance, that we saw. So that's going to be one factor. The FIs, well, they seem to have reduced their selling. You don't want to see a return of the big net sell number, and hopefully that turns into buying. So that's going to be point number one. Point number two is going to be Liberation Day. That's on April 2nd. And then we'll get clarity with regard to tariffs, counter tariffs, and reciprocal tariffs as well. So these are going to be the top cues in the near future itself. Now, the power of short covering, that was on display on all of last week. And that's why, I've been making this point non-stop that a net short market actually is a blessing in disguise. And just take a look at the way it's moved. If you look at the short positioning, this is the FI net short positioning. It has halved in the last 1 week or so. And coinciding with that, you have a 1,000-point rally on the Nifty. Beautiful looking graph, right? So you have a 1,000-point rally on the Nifty, while the FI net short positions have halved. All of this in a matter of a week. And that's the reason that you say that a net short market actually could be a blessing in disguise. That's the way it's played out. Well, let's move on to a couple of other cues then. Just take a look at the FI positioning, both on index futures. Well, the swing factor here is close to around 80,000 contracts in a single week. Because they've added longs, they've covered shorts, close to around 80 to around 90,000 contracts. Even on stock futures, if you look at it, there's close to around 2 lakh contracts swing out here. Because they've added long positions, they've as net long on stock futures, but they've covered some shorts and they're built on to the longs as well. Which brings us to what's the positioning on index futures? Well, I recall that the net short positions were around 85%, 85%. That's come down to around 68%. So the bulk of that short covering, majority of it, just in the near term, seems to have played out. And that's what the FI positioning is at. But look at the clients. They are the ones that have got it right. And in this bounce, they've gradually been reducing their long positioning. They were at around 1.3 lakh contracts on the long side. That number has come down to around 51,000 contracts, which makes you wonder, with so much of uncertainty just in the near term, maybe booking some profit at the higher levels may not be such a bad thing, going by what the clients are doing. That's the important option data. Well, the 23,000 put added close to 37 lakh shares. The premium's close to around 30 rupees or thereabouts. You just punch in that number and you'll get the near-term support. So both the Nifty and the Nifty Bank, all eyes are going to be on the 200 DMA now. Can they get to that mark? These are the important mark. That's where the 200 DMA comes in at. This is the important support for the Nifty going by the options data. And that's where the 50 DMA as well comes in at. And if you're looking at the Nifty Bank, we have seen these, it's revisited these lows in the last couple of trading sessions. So this becomes the important support zone. 200 DMA on the upside. And these are the levels that you want to look on the downside as well. Stocks that I'm looking at, well, I'm looking at IFB Industries. This is the stock that has halved from the recent peak. In October, it was close to around 2,300 rupees. It's come down drastically. Now, what's happened is it's conquered the 20 DMA. The 50 DMA is a little distance away. But in the last week, there were 2 sessions where you have massive delivery-based buying with close to 80 to 90% of the total traded volume was delivered. So I'll keep an eye out on this one, IFB Industries. Is it good for more? After seeing a halving of the share price on the top, we'll keep an eye out on this. Good delivery-based buying and some technical levels getting taken out as well.
Okay, all right. So let's straight away get to the action then. We have the equity call of the morning coming in. It's from Chetan Sheth of Nomura, who continues to believe that the extent, timing and scale of reciprocal tariffs will determine the outlook for Asian stocks. He says they have been cautious on Asia ex-Japan equities in general, but they continue to believe that they appear attractive for investors willing to look past near-term uncertainties, given recent underperformance, modest valuations and light foreign investor positioning, with a scenario of softer US dollar likely to bring some relief for Asian central banks to be able to embark on rate cuts to support local economies. He says a significant drawdown in Asian stocks on such tariff announcements might turn out to be the point of peak pessimism, where risk-reward becomes decisively more favorable for Asian equity investors to use those drawdowns as an opportunity to build longer-term positions. Buy the dip seems to be Nomura's view.